De Beers has controlled Africa's diamonds for decades. Today, the government of Botswana wants to control De Beers. Welcome to the Africa Briefing Room, where we unpack the latest headlines shaping the continent. In this briefing, we examine Botswana's bold bid to purchase De Beers, a move that could reshape Africa's diamond industry and accelerate the continent's push for resource sovereignty. Could this mark the beginning of a new era, as African nations are actively pursuing greater ownership, regulation, and value from their mineral sectors? Context and history. Diamonds in Botswana. Diamonds are central to Botswana's economy. Major discoveries at Orapa in 1967 transformed Botswana from one of the world's least developed nations into a leading middle-income economy, driven by mineral wealth. Diamonds account for nearly a third of Botswana's GDP and about 80% of export earnings, forming the bedrock of the national economy. Botswana, the joint mining venture between the government of Botswana and De Beers, was created in June 1969. Botswana is responsible for mining nearly all of Botswana's diamonds. At its inception, Botswana owned 15%, while De Beers held the majority stake. By around 1975, their ownership was equalized to a 50-50 partnership for mining operations. Separately, in 1987, Botswana obtained an initial 5% direct equity stake in De Beers Group, using a portion of its diamond stockpiles as payment to buy into the company. This stake was later increased to 15% by 2001. Before 2011, De Beers was privately owned with three main shareholders: Anglo American 45%, the Oppenheimer family 40%, and the government of Botswana 15%. In 2011, Anglo American purchased the Oppenheimer family stake for $5.1 billion, raising its ownership to 85% and becoming the parent company of De Beers. The government of Botswana retained its 15% shareholding. While this partnership has long been seen as a model of state-private cooperation, over the years tensions grew over how De Beers controlled sales and marketing, particularly regarding price setting and the share of diamonds Botswana can market independently through its state-owned Okavango Diamond Company. A landmark sales agreement was signed in February 2025 between the government of Botswana and De Beers, renewing their diamond partnership for 10 years. Under the deal, the share of Botswana's production allocated to Botswana's Okavango Diamond Company will rise from 25% to 30% for the first 5 years, and then to 40% for the following 5 years. Why now? De Beers crisis and industry shifts. Anglo American is in financial trouble. It reported an overall $1.9 billion loss for the first half of 2025 and slashed dividends by more than 80%. The De Beers diamond operation swung from a strong profit to a loss, earning about $300 million in 2024, but losing $189 million in just the first half of 2025, as diamond prices fell and demand weakened. This marks one of the sharpest declines in decades for the company once synonymous with global diamond dominance. Much of the pressure comes from the accelerated rise of lab-grown diamonds, stones created in laboratories using advanced technology that replicates the natural formation process. These diamonds are chemically identical to mined ones, but can be produced in weeks. Today they account for about 20% of the global market. Their lower prices, often 30 to 40% cheaper, have transformed the jewelry market. At the same time, global rough diamond sales have plummeted from $6 billion in 2022 to just $2.7 billion in 2024, reflecting weakening demand and growing competition from synthetics. In 2025, Anglo American reduced De Beers' book value by $2.9 billion, now valuing the entire company at around $4.9 billion, less than the $5.1 billion it paid in 2011 for only a 40% stake. The downturn has become so severe that Anglo American has decided to sell its entire 85% stake in De Beers, a move that could reshape the global diamond industry and give Botswana, which already owns 15%, a chance to increase its control. Regional power moves. Botswana is not the only country with ambitions in the diamond industry. Shortly after Botswana announced its plan to purchase De Beers, Angola's state-owned national mining company, Ndiama, submitted a fully financed bid for a minority stake in De Beers. The Angolan proposal envisions a pan-African consortium, with Botswana, Namibia, South Africa, and Angola jointly owning De Beers. According to Angola's Minister of Mineral Resources, their goal is to ensure no single party holds exclusive control and to build De Beers into a genuinely international company. These four countries are Africa's leading diamond producers, and their collaboration signals a shift toward regional cooperation over competition. In 2024, Angola emerged as Africa's third largest diamond producer by value, earning $1.41 billion from 14 million carats. While Botswana remained Africa's leading producer with 28.18 million carats, worth $3.31 billion, Angola's rapid growth has significantly narrowed the gap, particularly as Botswana's production declined amid weakening global demand and De Beers slowing sales. Angola's edge came from its liberalized sales system and diversified marketing strategy, which allowed its state-run owned Diamond Marketing and Trading Company, SODM, to sell directly to international buyers, avoiding the bottlenecks that slowed Botswana's De Beers-linked sales. Namibia and South Africa bring their own strategic assets to a potential consortium. Namibia operates Debramine Namibia, a highly profitable De Beers joint venture focused on marine diamond mining, while South Africa maintains historical ties to De Beers and continues to host significant operations, including the Venetia mine. Together, these four nations already control the lion's share of the African diamond market. Also, the consortium model also tackles a key practical concern: funding. Angola's bid is described as fully financed, already backed by its state-run diamond company Ndiama, in which Botswana would not need to seek out potential foreign partners to raise the capital needed for its own purchase. If Botswana chooses to accept Angola's consortium bid, the partnership could help Africa's leading diamond producers capture more value, not only from mining, but also from cutting, polishing, and ultimately shaping global supply and pricing. The financial reality: Botswana's gamble. Should Botswana choose the path to secure majority control of De Beers on its own, the deal could cost between $2.5 and $3 billion, roughly equivalent to its annual national budget. President Duma Boko aims to finalize the acquisition by the end of October 2025, as Anglo American proceeds with plans to sell its 85% stake in the company. To finance the deal, Botswana is in talks with Oman's sovereign wealth fund and other potential international investors. The partnership would help ensure sufficient capital while aligning Botswana with like-minded resource economies, pursuing greater control over strategic assets. If successful, Botswana would command its most vital industry. Diamonds generate about 80% of export earnings and roughly one-third of government revenue. Meanwhile, the domestic cost of the downturn is mounting. As of 2025, Botswana has cut 1,000 jobs, nearly 20% of its workforce, due to weak global demand. The unemployment rate now stands near 27%, intensifying social and economic pressure. With Anglo American committed to selling its 85% stake in De Beers, the question now is what kind of ownership or control will follow. The outcome will hinge on whether the next controlling party, be it Botswana, Angola's proposed consortium, or another investor, adopts a different approach from the traditional De Beers sales channel, one that allows greater flexibility in marketing, pricing, and value distribution. Analysis: if Botswana succeeds in purchasing De Beers, it would gain greater control over diamond pricing, marketing, and the full production chain, from rough stones to polished jewelry. Currently, most diamonds are exported rough for processing to India, Belgium, and Israel, with India alone polishing more than 90% of the world's supply. Yet, such control comes with serious risks. Botswana's record with state-owned enterprises remains mixed. Air Botswana, for example, has required repeated government bailouts, totaling over $64 million since 2019, and continues to face financial strain. Botswana Power Corporation has also relied on government subsidies to cover repeated losses amid declining power generation and rising debt, while the Botswana Meat Commission has struggled with low exports and cash shortages that have left it reliant on state support. At the same time, lab-grown diamonds are transforming the global market, with production in China, India, and Singapore expanding rapidly. In China, the world's largest producer of synthetic diamonds, the sector expanded rapidly last year, growing by more than 14%, driven by technological innovation and rising demand for sustainable and ethically sourced alternatives. These lab-grown gems are reshaping global markets as their lower prices and perceived transparency appeal to younger consumers in both the United States and China, reducing demand for mined stones. Botswana's push for control over De Beers is more than just a corporate gamble. It's a test of whether they can turn ownership into long-term economic benefit and navigate a diamond industry facing weak prices and rising competition from lab-grown gems. Continental context: Africa's resource sovereignty. Botswana's De Beers bid aligns with a continent-wide movement by African nations to reclaim control over their mineral wealth. In Mali, a revised mining code raised the potential government stake in new projects from 20% to as much as 35%, and enforced higher royalty rates. Niger has similarly moved to strengthen state ownership and control over uranium, while Burkina Faso has nationalized 5 gold mining assets under its state company Sopamib. Zambia has significantly expanded state involvement in copper production, achieving record output through government-backed investment and policy reforms. These are just a few examples. Across the continent, African nations are taking steps to assert greater control and secure more local value from their mineral wealth. These changes are a direct response to the legacy of accumulation by dispossession, where for decades, Africa's raw materials were exported with limited benefit to local economies. Modern policies are now emphasizing value addition, tighter regulation, and local processing requirements, all designed to ensure that more of the benefits from Africa's resources stay within the continent. The spark from within: Botswana's push for true ownership. In conclusion, Botswana's bid for majority control of De Beers marks a pivotal moment in Africa's quest for resource sovereignty. President Duma Boko has reaffirmed the government's intention to secure a controlling stake in De Beers, either directly, with support from partners such as Oman's Sovereign Wealth Fund, or through a regional consortium in which Botswana, Angola, Namibia, and South Africa would share equal ownership. Whichever path is taken, closing the deal would give Botswana, already a leader in diamond production, greater leverage over the entire value chain. This would set a benchmark for other African nations seeking to move beyond extraction toward real ownership and local value creation in their mineral sectors.